Treasurer Jim Chalmers paints a gloomy picture of the Australian economy and warns of higher inflation and interest rates. Macquarie Group outlines bumper earnings across the business, and the Commonwealth Games kick off in Birmingham. It's Friday, the 29th of July, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, are you a Commonwealth Games fan?
I am once they get going. Yeah. It's much like the Olympics. I love kind of the hype when it's actually on and being able to turn on the TV and watch something and know that something's going to be on and something exciting. I love the fact in the Commonwealth Games you're going to see a lot more Australians doing well.
Yeah, I think it's good for the first few days, but particularly because swimming's early on, you end up winning so much gold, it sort of devalues it just a touch.
You get spoiled.
And then you get to the Olympics and you're not winning much and you're thinking, hold on, I'm used to the good times.
Well, not as good as we thought we were.
Exactly. Exactly. No. Anyway, I do look forward to watching it over the next 9 or 10 days.
Yeah, and speaking of competition, Sean,
yes.
And this is a terrible segue, tomorrow we have the weekend edition of Fear and Greed coming out, which is kind of like the Commonwealth Games just between the two of us, with our Fear and Greed colleague Adam Lang adjudicating, where we pick the biggest stories of the week and all of that kind of thing. And every week we crown a winner. Someone goes home with the gold. Often it's not me, and that kind of sticks with me for a little bit.
Someone gets a silver. No one ever gets a bronze. It's just right. Gold and silver.
That's right. That's right. Maybe we should just cut out the silver altogether and it's you just gold and bronze and just.
I think you just need a W or an L.
Yep, that's right. That's right. Anyway, let's move on, shall we? Because we've got a good chat coming up after the show today. Sean, you're speaking with Greg Davidson from Datacom.
That's right. Datacom do a lot of work for government departments, big organisations around those huge organisations' technical IT needs. Just a really interesting chat about how they serve really big organisations in Australia.
Yeah, it's funny because it is actually quite a big organisation, but it's one you really don't hear that much about.
Yeah, it's not listed here, and it's privately held, so you don't hear a lot about it, but it is all over the place, Datacom.
Yeah, it sure is. Anyway, the main story this morning, Sean, it's not necessarily a good news story, is it? We had Federal Treasurer Jim Chalmers yesterday painting an ugly picture of the Australian economy, warning of higher inflation and interest rates and rising unemployment.
It seems to me, Michael, there's no middle ground with federal treasurers. They're either effusive, think Josh Frydenberg, Joe Hockey, or somewhere at the other end of the spectrum, think Wayne Swan, Peter Costello.
Yep.
New Treasurer Jim Chalmers came into the job more on the effusive side, I would say, but yesterday he was pretty miserable about the economy.
That's a very quick change, isn't it?
Very, very quick. The 48-year low unemployment rate will edge up towards 4%. He said inflation is heading towards 8%. Interest rates are on the way up. Economic growth next financial year has been downgraded, although it was upgraded slightly this year thanks to high iron ore, gas and other commodity prices. Even when Treasurer Chalmers had some good news, Australia's budget deficit for the last financial year won't be as big as expected thanks to commodity prices. It came with a sting. The nation's finances have structural challenges, he said, and untreated inflation could wreck the economy.
Sean, what about wages growth? Because there's plenty of talk about people not getting a lift in real wages.
This isn't going to happen for a while, unfortunately. Inflation is high and increases in nominal wages aren't likely to match nominal inflation until at least 2024. At that point, inflation will have fallen back to the 2 to 3% band and wage growth will be around 3.75%. So that means the cost of living isn't coming down anytime soon for most of us. Now, the Treasurer couldn't help having a dig at the previous government. He said the economic picture was complex and 9 years of mess can't be cleaned up in 9 weeks. He'll certainly get a chance to show what he can do over the next few years, and it will be a challenging task.
Yeah, sure will. It really seems like if I was to summarise it, you could say the economic path ahead is somewhat rocky.
Yes, that's probably well said. And I think that was highlighted by former Reserve Bank Governor Glenn Stevens yesterday. He's now chair of Macquarie Group. He said we should be alert to the possibility of recession in Australia because of all the supply side problems in the economy. Now, Glenn Stevens is a man of very few words. In fact, very, very few words. So the fact that he said we should be alert to the chances of a recession is pretty significant.
So, Sean, you mentioned that Jim Chalmers has really got a big job to do. He's got his work cut out for him. What sort of treasurer do you think he's going to be?
I don't know. Like, time will tell. He seems effusive, Michael, but maybe the job just gets you down. As an aside, do you know Jim Chalmers is actually Dr. Jim Chalmers? He has a PhD in political science from the Australian National University. His dissertation was on the prime ministership of Paul Keating. Keating, of course, was a very unique treasurer. I don't think there's ever been anyone like him.
I think you can probably say that again. So how did local markets respond to all the news?
Well, it jumped on opening yesterday morning after a strong lead from Wall Street, then tumbled, then rose again after Treasurer Chalmers spoke. It closed up 1% to 6,890 points. There were some very strong performances. BHP ended up more than 2.5%. The four major banks rose. Energy groups Woodside and Santos were up around 1%. Other big caps to do well included South32, Goodman Group and WiseTech Global. On the other side of things, Wesfarmers, Coles, Transurban, Telstra all went backwards, while Computershare was down 3.5%. Michael, it was another incredible day for the buy now, pay later groups Zip and Sezzle, which of course dropped plans to merge earlier this month. Zip's shares gained 20% yesterday, which was about the same as the gain the day before. Shares in Sezzle doubled on Wednesday before a trading halt was imposed. We spoke about that. Reopened yesterday, and the shares gained a further 40%. Both stocks are still well down from their peaks, but that sort of price action is incredible. There must be something going on that we don't know about.
Yeah, extraordinary. And what about global markets?
24 hours ago, the US Federal Reserve raised interest rates by 0.75 percentage points, a very big hike, but the commentary from the Fed noted economic weakness. The initial response from financial markets was that further rate rises may not be as severe as expected, and as a result, Wall Street jumped. The broad-based S&P 500 rose 2.6% after the announcement, while yields on US government bonds fell. It also helped some currencies because the US dollar weakened. The Aussie dollar yesterday actually pushed beyond 70 US cents for a while.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, Macquarie Group has upped its quarterly profit thanks to trading income, but its boss has warned that things are getting tougher.
Macquarie is now the sixth largest company on the ASX after its 3% jump in share price yesterday. Chief Executive Shamara Wickramanayaka said all its divisions had done well last quarter, in part due to favourable trading conditions, but lower equity markets would hurt the company this financial year. Macquarie's bank reported solid rises in both loans and deposits. The group has about $10 billion set aside for opportunities. I mentioned him earlier on, but former Reserve Bank boss Glenn Stevens chaired his first AGM yesterday. He flagged reductions in Macquarie's exposure to fossil fuels and a commitment to financing new, greener technologies.
Sean, Fortescue said iron ore exports beat analyst expectations again in the June quarter, but it warned of a big jump in production costs.
The iron ore giant wants to set a fourth consecutive year of record export volumes after shipping nearly 50 million tonnes last quarter. I can't get my mind around what 50 million tonnes of iron ore looks like.
It's huge.
A lot. The challenge for Fortescue, though, is on costs and also the group's ramping up spending in its clean energy division. Fortescue boss Elizabeth Gaines said she was confident in the outlook for the Chinese economy despite lockdowns and worries about the Chinese property sector. Fortescue is still experiencing strong demand from that economy, she said. Now, Ms. Gaines' comments echoed those made by Rio Tinto on Wednesday night. Certainly the chat from the iron ore miners is more positive than many other places about China. One big challenge for Fortescue, though, is labour shortages in Western Australia. Its share price rose 2.5% yesterday.
All right. Now, retail sales growth is slowing, which shows that consumer spending is coming off the boil.
And it's not too surprising given the slump in consumer confidence recently. According to the Bureau of Statistics, spending growth slowed to just 0.2%. During June, annual growth was about 12%, but much of that actually occurred last year at the back end of 2021. A pullback was inevitable given how much retail sales jumped during the pandemic. Spending in June fell most in food, household goods and furnishings, and department stores. It rose in clothing and eating out.
And just staying in the economics world, Sean, National Australia Bank boss Ross McEwen said people can generally keep up with mortgage repayments even though they will have to rein in spending.
He said there's been pain in the economy, but people had to accept that to get inflation back under control. He said that will be a hurtful process. While National Australia Bank's assistance lines have received more calls since interest rates started rising, there doesn't seem to be much stress in the market at the moment. This is the mortgage market, of course. Mr. McEwen also said Australia needed to get more overseas workers into the country to alleviate the labour shortage. That is a common refrain from CEOs at the moment.
All right. Now, Sean, the banking regulator wants finance service providers to improve risk management practices when involving third parties. I think this one might need a little explaining, please.
Yeah, it does sound very pointy-headed, but it's not really. Because banking is now much more than just deposits and loans and involves advanced technology, traditional finance companies, so think of the banks, insurers and super funds, are working with others, third parties, to help with products and services. So it might be around cryptos, or they might be partnering up with fintechs, etc. Those others are generally unregulated, and that worries the Australian Prudential Regulation Authority because, of course, it regulates banks and insurers and superannuation funds really, really closely. So it's going to create a new prudential standard to try and manage those risks around third parties. It's actually very significant because it will mean a lot for the fintechs and the crypto companies and that if they want to work with those regulated banks, insurers and super funds.
All right, that actually does make a lot of sense. Now, heading in a completely different direction now, Sean, monkeypox has been declared a communicable disease incident of national significance in Australia.
There's only 44 cases so far in Australia, but Chief Medical Officer Paul Kelly made the declaration in consultation with the Australian Health Protection Principal Committee. It follows the World Health Organization declaring the global situation regarding monkeypox to be a public health emergency of international concern.
Okay. Fund manager IFM has dropped plans to acquire road toll operator Atlas Arteria after initially buying a large stake in the business.
Yes, it never looks great when someone buys in, does due diligence, and then says, no thanks. IFM's Global Infrastructure Fund now owns 15% of Atlas Arteria. After a series of meetings with Atlas Arteria's executives, IFM said it's not presently in a position to meaningfully progress a proposal with the company, and it's ceased discussions. The operative word there is presently, so that's a hint that it may come back. Still, it's not a good look, and Atlas Arteria's share price fell back more than 6% yesterday.
All right. Now, Sean, we talked quite a bit about Kogan.com. It was really one of those kind of pandemic era star performers in the e-commerce space. But times have changed, and last year, net profit for the group fell by 40%.
Yes, it sure did. But there was sales growth. So profit was down, but there was just a touch of sales growth. And in fact, the final quarter of the year showed strength. So investors liked it. And Kogan's share price jumped 50% or more than 50% yesterday. Quite incredible.
What a day. Wow.
What a day. What a day. Mind you, in late 2020, Kogan's share price was about $25, right? It's now under $5, so it's come down a long way. Still, good news for it and founder and CEO Ruslan Kogan. Yesterday, he said, as the economy changes, people alter the way they shop. As the economy slows, better value is needed, and maybe that's not so bad for Kogan.com.
All right, moving on to overseas news now, Sean. A US aircraft carrier and strike group have entered the South China Sea as part of what the 7th Fleet says is a scheduled operation, but it's sure to antagonise Beijing.
Yes, the USS Ronald Reagan, a nuclear-powered supercarrier, made its way to the disputed waters yesterday. The trip follows remarks this week by China's foreign ministry that Beijing was getting seriously prepared for the possibility that US House Speaker Nancy Pelosi could visit Taiwan. Of course, China believes Taiwan is part of its territory. Most of the rest of the world doesn't. While the presidents of the two countries are due to speak to each other tensions are definitely escalating, and the movement of USS Ronald Reagan into the South China Sea won't help.
No, certainly not. Now, Sean, Asia's richest woman has just lost half her fortune. That's more than $12 billion as a result of the property crash in China.
Yes, this year the fortune of Yang Huiyan, the Country Garden co-chair and easily the richest woman in China, has gone from $23.7 billion US to $11.3 billion US dollars, according to Bloomberg. Country Garden is the largest property developer in China, and like much of the sector, it's been hit hard. Now, property accounts for about 1/3 of all of China's output. It is massive. In fact, it's more significant to China than property market is to Australia. So think of it in those terms. There was some good news, though, yesterday. Beijing said it would help out with more than $200 billion US dollars in loans for stalled property developments.
And finally, Sean, we mentioned this at the top of the show, the Commonwealth Games have kicked off in the UK's second biggest city, Birmingham.
Yes, it's been a bit of a low-key build-up. We were talking about that at the top of the show. Ticket sales have been brisk, but not a sellout, according to the Financial Times. Broadcast deals were only wrapped up last week. The headline act at the opening ceremony was Duran Duran. Its last mega hit was actually 40 years ago, so I'm not sure that. Duran Duran, of course, are from Birmingham. Now, this is the 22nd Games, and competition occurs in 19 sports among 72 nations. It costs the UK about $1.5 billion Aussie dollars to stage. The Games were supposed to be held in Durban in South Africa, but it missed a series of preparation deadlines and it was moved to Birmingham. Good luck to everyone, especially the Australians.
Yes, absolutely. Well said. I'm just stuck on your lack of appreciation there for Duran Duran.
I loved him 40 years ago.
Yeah, it does feel like you're a little bit critical there, Sean. But anyway, we will move on. We will move on and we'll wrap things up. Up next is the Fear and Greed Daily interview. And today you're speaking with Greg Davidson from Datacom.
Yes, as we mentioned at the top of the show, Datacom is a very big organisation that most of us know very little about, providing great tech services to government and big business.
All right, that's it. And that chat with Greg Davidson is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 29th of July, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.